everyone, welcome back to Cryptoria. So this is another English episode for us, so which means we invite another guest to join our podcast. And actually this guest is my honorable because everybody knows currently the stablecoin is really on the hotspot. And the Circle just got this IPO and everybody got just crazy about the Circle stock price. So this time we just invite another stablecoin founders and they just building the totally different things with Circle. But it's building the very creative and very, I'll say it's very exciting things, but it's complicated to understand. So welcome back. And we just invited the Luca from the M0. Welcome to join us, Luca. Would you mind just do an introduction to our audience?
Thanks for having me. I promise I will not comment on Circle stock price. But yeah, very, very quickly. I don't want to spend too much time on myself. What we're building is probably more interesting. But I'm one of the two founders of the M0 project, so to say, with Greg. I act as a CEO of the business as well. I started my career in economics, mathematical economics. I spent all my career in financial services. I used to be a banker and investor in financial services companies. So I've been very active in the financial intermediation space. Sometimes people say you come from traditional finance. I used to come from traditional finance who was serving finance. So I've been working on financial intermediation for a long time. Joined the crypto movement, revolutionary movement during the DeFi summer for a few reasons. I think I was absolutely captured and fascinated by this first real attempt to reinvent how the back end of finance, how value moves. And I had a lot of free time at the time. I was, in hindsight, it was a blessing, but I am a cancer survivor. I fought cancer successfully during 2020. So I actually spent my chemotherapy months studying crypto, writing about crypto on a Substack that became very respected in the space called Dirt Roads, and participating with some of the largest projects in crypto, starting with MakerDAO. So I spent a couple of years in the MakerDAO ecosystem, trying to connect the protocol with real lenders. At the time, it was the very beginning of the so-called real world asset program at Maker. That's how I met Greg, who had spent way longer than me at Maker and had tried on the other side to connect institutions to the protocol. Up to late 2022, when we both decided that although successful, those DAOs or initial crypto projects were not ready to scale where we thought crypto could scale. And so we stepped aside and founded M0. We went through 2 rounds of funding. We raised capital from some of the best investors in the space, built the team, built the tech, and de facto just coming to life effectively in the last 6 months. So I'm sure we're going to talk a lot about what M0 does. So a long journey, a lot more to build.
Oh my God, respect. I need to say first. I can't find this story online at all, but really nice to have you to share with us this experience and journey. Really respect.
Thanks a lot.
Since you already said you work in the TradFi, and more precisely Morgan Stanley, one of the giants in the field, and then later you get into MakerDAO, which are also like a founding project of DeFi. What at this stage, Vivian just mentioned that Circle, IPO and this kind of hype, which draws a lot of tension around the world, not just simply in the crypto sector, but also in the normal traditional finance sector. What makes you believe that the world now needs another stablecoin protocol other than Circle and Tether?
A couple of things. First of all, the stablecoin space is still very, very, very small. So currently there are a bit more than $200 billion, probably $230 billion of stablecoin floating. This is less than 1% of M1 globally in dollar terms. And I think this is so early. I mean, probably stablecoins is a fraction of of the balance sheet of a large bank. So my expectation is that the stablecoin total value float will probably 10x, 50x in the next decade or so, not only in dollar denomination, also in other currencies. So we are very, very early. And step number 2 is, do we really think, even if Circle and Tether were perfect companies absolutely building what the world will need in the next 10 years, which I don't think they are, but would we really think about living in a future where the entire money float is managed by two companies? Of course not, right? Even if that happens, some regulation will actually just break those companies apart, as always happens. So this is the second reason. I don't think the massive sector that stablecoin will be dominated by two companies. And I don't think in general the next phase of stablecoin growth will actually need the type of issuers that we have had so far. Until now, Circle were giving an entry ticket to people who wanted to stay within the crypto ecosystem. Now crypto rails are used by institutions around the world entirely, and they require different things. They required common standards, they required shared liquidity, they required true programmability, they require other things that are not necessarily tied to a single company. So what we're doing, as you suggested, is a bit different, because we think that the next generation of stablecoin users will require different things. So I don't think there is any other space that could make a builder so excited. Is a space that is already hosting two companies that are worth probably combined more than $100 billion, and it's probably gonna 100x in the next decade or so. So it's a good place to be, I believe.
Yeah, so I think everybody understands how Circle and the Tether they are doing, because they are quite simple, right? I have some collaterals in the central bank, and they do the auditings, and we disclose the asset. But that is a centralized stablecoin. But what does decentralized stablecoin means?
Yeah, first of all, the collateral is not sitting in the central bank. The collateral is sitting in the balance sheet of a private company, which is very different. So stablecoin, decentralized doesn't mean anything. There are so many ways it's decentralized as a word has been so abused in crypto, right? You have some projects that claim to be decentralized and they're not. Blockchains that are truly decentralized. What does decentralized mean? Is decentralized consensus, decentralized decision-making, workforce? Who knows? I think that what we are doing is something slightly different, where we think that we shouldn't have one company issuing one product that then everybody uses and everybody embeds within the product they have. We should have a network that has common standards, interoperability, and shared liquidity that can allow these people to use digital dollars. What I mean is, and this is the beauty of crypto, right? Crypto unlocks composability and unlocks full transparency. So what we have been doing at M0 is we have been taking this monolith, which is a stable coin with a brand issued by a company, and we have completely broken it apart in different bits and pieces that can be composed, and others, different actors can do different things. It's Circle, you need to send the money to Circle. Circle is minting USDC. USDC is not programmable. I mean, they can say whatever they want. USDC is programmable by Circle. It's not programmable by you. USDC, and then whatever you want to do, you need to go to the Circle as the company and agree additional features. Maybe you want to have some money back. Maybe you want to have an additional audit. Maybe you want to have some a change for your chain. They will do it as well, or not. At M0, we are creating this framework where you can have different parties doing different things, and everything is programmable. So what it means is you can have custodians of assets that are not necessarily the issuers of the assets. You can have issuers of the assets in different jurisdictions. You can have third-party validators that validate the reserves, which are not necessarily the custodians. And then you can have the distribution partners, like the integrators that actually take the technology, and they can program at will however the dollars behave, whether they want to keep the yield, pass the yield, have a brand, have some sort of whitelisting, blacklisting. So it is like a settlement network that allows different people to do different things and compose it in a way more programmatic and granular way. We think this is the future. And we think this is the future because the issuance of stablecoin, everybody wants to issue stablecoin, as we know. People look at Circle and Tether, and all the banks say, we want to issue your stablecoin, a stablecoin. Who cares, right? If JP Morgan coin is not embedded in the Venmo that you use on your phone, you don't really care about JP Morgan coin. So what we think is issuance of stable coins, like putting the money in a reserve and issuing the token, is not going to be a high margin business. It's going to be a very low margin business. But low cost as well. And most of the fun and the profits will accrue at the distribution layer. And so we want to allow this full composability and full control by the distribution layer of how digital dollars behave. So it is a bit more complicated, but ultimately we're just taking a company, breaking it apart with technology and distribute it in crypto.
Right. So it's decentralized, but actually when we go through the white papers, you guys still need permission minters, validators, and earners. Does anyone ask you whether you guys just saying decentralized is more like a shell, but in the essence it's still like a traditional banking system?
Yeah, but we know, that's why I said at the beginning, we're not saying we are a decentralized distributed business at all. I think that what we're trying to say is we are trying to be more distributed than a central company. So I think that you can have 5, 10, 15, 20 issuers. You can have external validators looking at things. You can have distributed governance instead of a single monolithic company. So what we are trying to do, as I was saying before, we're just trying to break apart a single company in different components and making it more transparent, which is what crypto is. Fun fact, I ran, when I was at Maker, still the largest activist campaign in DAO governance. I wanted to have more checks and balances in the governance, and I rallied every token holder possible to vote for more checks and balances. The founder was enough to outvote everyone. So I don't think there are so many decentralized projects when there's one person that is taking all the decisions. Now, we are currently, when it comes to collateral storage, as you were suggesting, that the reserves are sitting in traditional custody accounts, we need still to rely on old school TradFi structures, but that part of the equation is going to change, is changing very quickly. We are seeing some of those securities that can be used as collateral being tokenized, sitting on public ledgers, being more composable. So even the custody collateral management side of traditional securities like US treasuries is going to become more crypto friendly with time. But the other thing that we are working on is the governance of the protocol and the programmability and everything. It is really transparent and on, let's say, closer to the crypto ethos than the company ethos, right? The M0 protocol is immutable. There is a set of governors that can decide who can come and control, who can parameterize it. Everybody can see the decisions, everybody can see the reserves, and it's a process. We are in the process of decomposing companies into smaller building blocks and just making them more open, more accessible, and more transparent. But it's not something that exists overnight.
So may I know who can issue the dollar-based stablecoin? It's the licensed company or licensed institution or anybody?
The protocol is permissioning those that can issue the common stablecoin have their own required licenses in the jurisdictions where they operate. So currently the only issuer on the network is a BVI issuer like Tether, so it's an offshore issuer. With the Genius Act, we will soon have an issuer in the US if the Genius Act passes, and we will have it somewhere else. Now, the reason why we didn't start from the US is that before Genius, it was very difficult to understand what was approved issuance in the US. It was a bit like in Europe, where if you want to issue a stablecoin, you need to keep all your reserves in a bank, in unsecured deposits, which is very, very bad for the consumer. So the European regulations are protecting the banks, not the consumer. Thank God the US are going in a different direction. So issuers they need to have their own regulatory requirements. But the issuance business is very banal. Issuance business means that you need to make sure that you have a bankruptcy remote vehicle that is storing treasury-like instruments, US treasuries and the likes, and you can issue a coin that is backed by those instruments. This is exactly what we do. Now, it is a bit more difficult if you're like Tether and you don't like only to hold treasuries, but you like to hold a lot of other assets. This is not the case of M0. So in the US, if Genius passes as it is under a certain threshold, money transmitters will be able to issue stablecoins. People who are familiar with regulation, they know that money transmission regulation in the US is not like having a bank charter, is way easier. But the clarity around stablecoin issuance in the US through Genius is phenomenal. Actually, if Genius passes, stablecoins are going to be safer than bank deposits, which is incredible. Because if a bank goes down, all the money that you have beyond the deposit insurance scheme, you will lose unless the state bails out that bank. Sometimes they can, sometimes they don't, who knows. Under Genius, stablecoin all holders of US issued stablecoins will have super seniority in case of bankruptcy. So they will be fully covered, which is great. So interesting to see. But for us, what I was saying before is like the issuance business, needs to be simple, super safe, super transparent. It's not a very high margin business. I think issuers of stable coins, so those that create the token and they bring it to life, probably it's going to be a 20, 30, 40 basis points business, not a 4% business like Tether. Because most of the money is going to go to the distribution network, of course. Already happens with Circle.
So, I think the last time when we interviewed one of those dominating Bitcoin project, they're doing the Bitcoin Fi. So BTC Fi now is another narrative which also in hype. This founder already mentioned that the reason why the institution accept Bitcoin so easily is because the narrative and the underlying logic of Bitcoin is much more easier to understand comparing to Ethereum. Now, M0 actually offers a much complicated governance and a really novel token economics comparing to the other two giants we mentioned. So would you think that this will be difficult for those institutions to accept M0 other than these two giants?
I think these are completely different things. I think Bitcoin is a commodity. People buy Bitcoin as a reserve asset. They invest in Bitcoin. It's very easy to create financial products on Bitcoin. It is very clear that Bitcoin is not a security, but it's a different beast. What we're doing, M0 is not creating an asset that people can speculate on. M0 is creating infrastructure. So it's not the same thing. Now, whether institutions are going to adopt M0 to actually issue stablecoins, I absolutely don't think they will. And I don't care. The point here is that we are not building M0 for JP Morgan. We are building M0 for the next generation of financial superpowers. So we are building M0 for Hyperliquid. We're building M0 for Noble. We're building M0 for DeFi. So the type of clients is different. I always make an example of a company I respect a lot, which is also very active in stablecoins, which is Stripe, right? Stripe was born to provide support to startups. When they started, their clients were the DoorDashes, the Airbnbs, the Ubers. They had different needs. They were not covered by some of the incumbents. Fast forward, these are the largest companies in the world, and Stripe is worth $100 billion plus. So that's the same. I don't think we are building M0 for the adoption by JP Morgan. We are building M0 actually to challenge incumbents and give a better, more transparent and more fair infrastructure layer to the builders of the financial infrastructure in the future, which we think is going to run on crypto rails. So what I think is, today, with all the fintech companies we have, the applications we have on our phones for payments or exchange or storage or whatever, they are by some traditional banks behind the scenes. We think that all the fintech of the future is going to be non-custodial, is going to be backed by crypto rails, and they will embed dollars. The user of these applications will not know the brand of the dollar, will just know that the dollar is a dollar or whatever currency it is a balance. And this dollar balance is going to be powered by companies like M0, most probably M0. So I think the type of cohort we're building for is different. We are building for the revolutionary set of financial services builders of today that is going to eat all the incumbent alive over the next 20 years.
Cool. So would you mind just take us through the current stage of the M0 and maybe 2 or 3 years? What after the 2 or 3 years, what M0 will going to hit, what kind of the milestones?
Yes. M0, as I mentioned, the protocol itself allows the creation of, let's call it raw material, wholesale stablecoin called M. This M it's very, very liquid, is very interoperable, and can be used by application partners, extensions, like people that build financial products. I'll get to that in a second. To actually, it can be wrapped and can be used to create their own stable coins in their own environment. So we launched the protocol effectively 6 months ago, probably a bit more like the real launch. And we have been growing very quickly, especially in the last few months. So I think now we are crossing $300 million of issuance, absolutely not incentivized, but we are growing by a factor like $15, $20 million a week. The point is the following, like who is actually using M0 to build their own stablecoin? Examples. Noble used to be, still is, the main issuer of stablecoins in the Cosmos ecosystem. You might know Cosmos is a large crypto ecosystem. They wanted to issue their own dollar, the Noble dollar, USDN, wants to become the canonical dollar of use in Cosmos. Can do a lot of cool stuff like yield distribution, programmability, etc. Noble under the hood is M0. So Noble is built on M0. Hyperliquid, people might know that Hyperliquid is probably one of, if not the largest perpetual exchange in the world. They have $3.5 billion of client funds on the platform, on the chain, which is mostly USDC. USDC doesn't provide any yield to the Hyperliquid ecosystem. You know, for $3.5 million, we're talking about $130 million a year. It's not even an official version of USDC, I believe, that is on Hyperliquid L1. And now some members of the team, they have decided to create a Hyperliquid specific dollar called USDHL that is actually capturing the yield and rebuying Hyperliquid tokens to benefit the community. USDHL is built on M0. Cast, which is credit card provider, new bank that wants to provide credit cards that have wallets behind the scenes and not traditional bank accounts, plus a lot of additional services. Cast is very big in Asia and in Latin America. Cast is launching their whole infrastructure. Behind the card is M0. And we have a long list of examples like this. So I think that we reached $300 million with 3 partners live. We have a long list of partners coming online. USDAI, they are creating a stablecoin product that is wrapped around treasuries plus additional assets and sources of income, is also built on M0. So we think that any type of builder who wants to embed digital dollars in their ecosystem or in the product they do, they can actually embed M0 just with code, no lawyers, no paper, in a very, very quick and transparent way. It's pretty exciting. So like Vivian, you were asking the milestones. I think we want to grow in terms of TVL and in terms of partners. And I think that our ambition is to just keep growing. So if in a year we reach $1 billion of TVL with 20 partners building live great things on top of M0 infrastructure, we will be happy. We'll keep growing, keep raising funds, keep building cool stuff. But it's pretty exciting times.
Cool. You know, the Hong Kong just passed the Stablecoin Act as well. So once the Hong Kong passed the Stablecoin Act, and in our audience group, they are just asking us, does in the future, does any industries and any project actually they can issue their own stablecoins just for their stablecoins that backed by the Hong Kong dollars or US dollars or maybe the Euro dollars. So I think that is what M0 believes. So basically every native project who's want to issue their tokens or they want to bring their business online, so they can building their own stablecoins based on the M0 tools. Am I understanding right?
Yes, they can do it already now. Now the issuance itself, issuance is just like issuance itself is like custody of the shares, right? The shares are in some custodians, the reserves are in some custodian. It's a pretty boring business. I think what is important is any institution today can fully control their stable coins. They can brand it, they can get the yield, they can program the yield, they can decide the features, because, we always talk about blacklisting, whitelisting, and transaction monitoring. USDC as blacklisting ensures that USDC standards to blacklist and whitelist are the same standards of a project that is in Hong Kong. Who knows? Maybe a very completely different bit, very completely different reasons. So also for political reasons. So our approach here is that everybody should fully control the dollars that are in their applications. Through M0, this is possible already today, only with code. So that is the ambition. Now, the difference from what others can offer is creating a stablecoin. The most important, most difficult thing when you launch a stablecoin is not the backing. The backing is pretty easy. The most difficult thing is the liquidity and the interoperability of the stablecoin. It's tethered not because it has phenomenal backing. Tether is tethered because it's ubiquitous and is trusted everywhere and exists and is super liquid everywhere. So the M0 protocol allows everybody to issue their own stable, to launch their own stablecoin without breaking liquidity. Because there is all the liquidity and interoperability exists around a wholesale behind the scenes asset called M. So everybody that builds something on M is not breaking the liquidity and interoperability of M. They're actually bringing more liquidity to M, which is the way the banking sector works, funny enough. Like, the dollars, the bank accounts you have in bank A and bank B are not the same. The risk of the bank is different, but they feel the same because behind the scenes, these banks are all connected through the central bank in the same ecosystem because they follow the same standards. So they are interoperable. Bank deposits are interoperable. That's why we don't call the JP Morgan bank, the JP Morgan dollar, the HSBC dollar. Even in Hong Kong, funny enough, I love Hong Kong. Hong Kong dollars in the paper dollars are issued by private banks. I don't know, like you guys know, when you look at your banknotes, some banknotes have Standard Chartered, some banknotes have HSBC on it. So they're issued by different banks, but they're fully interoperable. If I pay you 100 Hong Kong dollars that are issued by Standard Chartered or are issued by HSBC, people will accept it anyway. So it's very similar, right? The interoperability is, but in the case of Hong Kong, interoperability is guaranteed by the monetary authority. In the case of M0, the M0 interoperability is guaranteed by a protocol. But the concept is the same. Imagine if you were having in Hong Kong HSBC banknotes and Standard Chartered banknotes that are not really interoperable. You would fraction the system and it would be very messy. So we don't think this should be a good future.
Oh, now I understood.
Yeah, I just want to pop up the questions. So you just mentioned about the Hong Kong dollars sort of things. And, I know you guys are criticized about the CBDC. So how do you think in the future, maybe some jurisdictions, they will issue the CBDCs and some will okay with the stable coins? Could you tell us how do you think about the CBDCs?
Yeah, I think I criticize CBDCs as a retail product. I don't think CBDCs are a good retail product. For many reasons. I think that the government doesn't want to, okay, there are some exceptions, but the government in general, especially in Europe and the US or even Latin America, doesn't want to deal with millions of retail accounts and provide services to retail accounts, etc. The government doesn't want to do credit issuance either. Like imagine if you do retail CBDCs, nobody will ever park their money with traditional private financial intermediaries, because why would they? And who is actually going to do the credit? Is the state going to do the credit? I think it's very difficult, and there is some moral hazard around it. Now, what I think is going to happen is that CBDCs are going to exist. They are going to become a wholesale product, which goes from central bank to private players, and they are somehow going to substitute the more wholesale repo windows that connect the commercial banks with the central banks. So I'm expecting protocols like M0 to embed CBDCs in their reserves instead of actually embedding treasuries or other assets. I think that the central banks and treasuries are in a great position in this new era of monetary policy because they can really connect across the ecosystem. And I think what stablecoin issuers or DeFi in general is doing is not substituting central banking. I think who is in a very bad position are commercial banks, because commercial banks do not really give great quality credit anyway. Most of the credit, sophisticated credit, is done by shadow banking or funds. Commercial banks only have the monopoly of deposits. But now if they give you the option to put deposits in a safer place, why on earth would you put deposits in a commercial bank? And then what is the commercial bank doing, given that you don't even enter into a branch to go in a commercial bank? The new generation, I think people under 30 years old, they never stepped into a branch of a commercial bank. They probably have most of their financial use cases like provided by some sort of application on a phone, right? So I think what are these guys going to do in the next 20, 30 years? Not much, in my opinion. They're going to become some sort of low margin custodians and some sort of AML, transaction compliance monitoring places. So I think CBDCs are definitely going to have a place in the future of monetary policy. They will just not be retail products, in my opinion. They will be wholesale products behind the scenes. This is obviously just an opinion, and who knows what the future will look like.
Okay, so let's talk about some really interesting design or setting in M0's governance and economics. The first one we really want to discuss with you is the reset function. So, the first time I look at this word, I just mine just pop out when I activate this function, everything go back to default. And if so, then what kind of default that would be? Or is something like hard fork that I will do something, completely different if we disagree with something. So could you just try to walk us through what's the reset function in M0?
Yeah, I think before talking about the reset function is because it seems that the protocol steals everyone's money. So the protocol is governed by tokens, right? So the protocol is immutable. The M0 protocol is immutable, but there are certain actions that the governors of the protocol need to do, like parameterizing the protocol, what are the rates of the protocol, buffer margins, which minter or new issuer is permissioned to issue, etc. So it's not many. Now, we come from crypto, and we have seen how bad it was for most projects to actually have one token that is the token people buy to speculate on the success of the project, and is also the governance token. So you see large projects like Maker, like Uniswap, like others, where 5% of the token holders are actually enough to control the protocol because nobody else is voting. Most of these tokens are sitting in centralized exchanges or people who don't want to vote. So we split our tokens. The M0 protocol is governed by two tokens. One is called a power token and one is called a zero token. The zero token accrues most of the economic benefits of the protocol, and the power token has voting power. And again, we haven't invented anything because the shareholder economy works exactly the same. Some large, if you look at Berkshire Hathaway, Warren Buffett has a different class of shares compared to the class of shares we buy because he has super majority because he's controlling the company. And we are fine with it, right? Because I buy Berkshire Hathaway shares, not because I want to control the company, but because I want to benefit from the economics of the company itself. So we use the same concept. Now, the M0 tokens are not listed, are not public in any way. Because we think that in the long term, the cohorts of people that want one token versus another is going to be very different. Now, the protocol is punishing power holders, so those that have the ability to vote, if they don't vote. So if you do not vote, you get diluted very, very quickly. So the protocol is pretty much confiscating some of those tokens and selling them in an open source auction, through an algorithm, to whoever wants to buy it. The idea is that it's suddenly 50%, 60% of the power holders, they get disengaged. They really don't want to participate in voting for whatever reason, governance reason, compliance, regulatory, lack of interest. The protocol is going to progressively dilute their power and give it to someone else. If you keep voting, this doesn't happen. Now, what can happen is that at some point, this dilution can be very disorganized, and the decision makers, the power holders, are not the right ones for the protocol. So the zero holders, those that can have the economic powers, they can reset power allocation to themselves. Now, to do this, you need very, 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 very high quorum. So I think now it's 70% quorum. So the idea is, imagine that you are shareholders of a company and you are hiring management. If the management is really misbehaving, you can fire management and reestablish management. And I think this is how the reset function works. We are not expecting to use the reset function anytime soon. This is a credible threat that people have, so that they know that if the power distribution, if there is a malicious actor that wants to buy or amass a lot of power tokens to do something bad for the protocol, the zero token holders can always reconfiscate the tokens to themselves. So it's a security measure. But this doesn't apply at all to the distribution of the stable coins that are generated on them. These are completely untouched. I think what changes, it's simply the control distribution for the protocol in the long term.
Okay, so the next question is about the speed. So last time when we did an interview with the Algorand Foundation CEO Stacy, she mentioned that the reason why MasterCard choose to partner with Algorand other than Solana or Ethereum is because, first of all, they're most reliable, and the second one is their speed. They can constantly keep the same speed, which is really stable. So how about the speed of all those stablecoins that are issued by M0, comparing to Circle and Tether?
Yeah, I'm not going to comment on Algorand success, adoption success versus Solana. But I think the M token is issued on mainnet. So the origin of the protocol is mainnet, Ethereum. But through partners like Wormhole, with whom we have very, very deep relationships, we are going to exist in as many chains as required. So you can have M-powered stablecoins on mainnet. You have M-powered stablecoins already on Solana. You can have them, or you have them on Arbitrum. You will have them on Sui. You can have them in EVM layer 2s. So the stablecoin tokens that are built on top of M0 are ubiquitous and will be as omni-chain as required. So the speed will be Speed is exactly the same as the USDC and USDT that exists in those environments. The liquidity is the most important question. M-powered stablecoins are not as liquid as USDC and USDT yet, but they are very liquid. So you can go in and out on them against fiat or USDC, USDT with relative ease, and it will become more and more liquid as we scale. I think liquidity and interoperability are the two most difficult things to build when you're building a stablecoin. That's why there is not really an incentive to build yet a new stablecoin, but it's way better to operate on standards or common shared networks instead of like completely new ones. Because every time you issue a completely separate stablecoin, you need to recreate this liquidity and interoperability network from scratch, which is the most difficult thing to do.
Cool. So I do have another question. It's not related with any technologies. And I know the current stablecoins, the landscape is very, very chaotic, and everybody just, every big institution and giants, they want to get portion of this huge cake. But you just mentioned the liquidity is one of the competitive advantage of M0s. But for the retail investors, and they are lazy, actually. They don't want to adopt any new things. And if I'm good with USDC or USDT, I understand it and those tokens in my wallet, I can use it. So how M0 can compete with the current, the two giants, USDT, USDC, and the upcoming new entries?
I think the retail investors are so lazy that they will actually not even care what is the name of the stablecoin. I believe the retail investors will use an application and they will put money in an application. So what I mean is you have money in a wallet and you will not decide what USDC, USDT, USDE or whatever. You will just see the dollars in that application, and it's going to be the application that decides what type of stablecoin infrastructure behind the scenes they will use. So we are targeting application builders, and the application builders are not happy to leave 100% of their margin in a predatory way to Circle. And they are so unhappy that the big ones, they already are not, because as you know, Coinbase is keeping all the profits that all the reserve income on USDC on the platform, and others are doing the same. So we think that this market is going to bifurcate completely. There are certain products that will compete because they have a very strong brand adoption. I don't think USDC is this product. I think USDT is this product. Like people around the world in emerging markets, they want to use Tether. They trust Tether. They trust Tether as a brand. They built an incredible distribution network. I fully agree with Paolo, the CEO at Tether. They have boots on the ground. People use Tether. They love the brand. They will continue to use Tether. Circle is not like this. Circle is used in DeFi because it's the best alternative, but there is no loyalty on Circle in DeFi. And he's used on Coinbase, but Coinbase pretty much owns Circle, right? From an economic perspective, from a return perspective. So I think that the market is going to bifurcate, and part of the market is really going to gravitate around brands of a stable coin as a product itself. And I think Tether is the best example of this. And the other one is just simply going to use financial applications, and they will trust the financial application. Like you have money in Revolut, you have money in Monzo, you have money in Venmo, and then this application will use stablecoin rails behind the scenes. And we think that in Robinhood, and then we think that these application layers will decide what type of infrastructure we use. And we think that's where M0 is playing. M0 doesn't want to be a retail brand. We want to be a builder-centric brand, that a bit like Intel Inside. You're buying a computer, you're not deciding, you're not buying the processor of that computer. You're buying the computer, and then the manufacturer is deciding what type of processing power they put. So we are targeting those guys. That is a very, very different. So that we would love for them to use their own brand, right? Hyperliquid should use their own brand. Noble should use their own brand. Cast should use their own brand, not M0. M0 is behind the scenes, as transparent as water.
I got you. So M0 just like provide stablecoin cloud service. So, every internet company, they need to use cloud services. But currently, they just like the Amazons, but M0 just like the stablecoin cloud service. Okay.
Yeah, it's a good one. I hadn't heard this, but I think it's a good one. It's a good analogy.
Right. So the next question would be definitely about regulation and compliance. Since you already know that USDC, the reason why it's got its position nowadays is fully regulated, and what Tether
is not. USDC is not regulated. There is no stablecoin regulation in the US. So USDC is not regulated.
In many people's eyes, USDC is regulated.
That's a good point.
Is fully compliance, while the Tether is excluded in some of those exchanges because it's not regulated, right? So that's what the people are thinking. So in M0's case, do you guys need to apply the license in different jurisdictions, or the projects, for instance, like Hyperliquid, they need to apply the license on their behalf so that they can issue the stablecoin on M0?
This market is split into, I think, the issuance and the distribution. I think the issuance in itself is regulated in certain jurisdictions. So, for example, in the US, when Genius will pass, M0, there will probably be an issuer of M0 related tokens in the US. They will need to have their own licenses, right? They're using M0 as a cloud service, as Vivian said, but the issuance is theirs. Circle is not a regulated business. Like there is no regulation that regulates stable coins. They are operating in a gray area. This is going to change with Genius. So I think those issuers will subject to their own regulation. We think that this regulation is going to be pretty banal for stablecoin projects that have the vision we have, because we are over-indexing on safety and transparency. So where the regulation is asking you need to have fully collateralized stablecoins, we're actually asking for 2% over collateralization of the stablecoins. The regulation is asking for monthly reports. We are asking for daily reports. So I think it's way easier for us to comply. In the distribution, those that use stablecoins for their own product, they have their own concerns, right? If they are providing a service that is whatever it is, they have their own certain regulations, which is completely different story. Like, if you're providing a credit card project or providing an exchange project or a DeFi project, who knows, right? It's completely different. On Tether, I think it's misconception. I don't think Tether is successful because it's not regulated. Because actually Tether uses their blacklisting abilities way more than Circle. So Tether has been pretty good friend with the enforcement agencies in the US. That's why they've always been operating. I think people use Tether because it's very liquid. So Tether is everywhere in those countries where Circle is not. So I think the competitive advantage of Circle is going to be on large institutions. So if you're large institutions that want to embed stablecoins in the US, and obviously you want to go with a player that is listed in the US, it feels legit, it's big, you're not going to get fired by your board if you're partnering with Circle, and you were going to partner with Circle. But that's not our market. I don't think it's a profitable market either. I think that, for as much as I can like those guys, but I don't think JP Morgan or Fidelity or Morgan Stanley is going to build Uniswap or Revolut. I have an HSBC. I use their online banking application, and they have some sort of like neobank internally for cross-border payments, etc. Sorry, HSBC, it's awful. I know that there are startups that are doing way better job, right? So I think these are completely different players. But regulation is going to be very tricky because these assets are global in nature. They move around globally. So it's very difficult to comply with regulation because who's your regulator, right? If you have an asset that has been issued in the US and is used in Hong Kong and you're paying someone in Singapore, who is your regulator? And Hong Kong, Singapore, US, UAE, they will most probably have different regulatory requirements. So who is, like, you have, let's say, blacklisting functionality. Who is deciding who you should blacklist or not blacklist? Maybe some enemy of the US or friends of the UAE, right? So we are going to get into a pretty messy territory in terms of regulation, because regulation was built when the environment was closed loop, geographically speaking. And now these assets, they move around the world permissionlessly. It's going to be very, very difficult to actually be super strict in terms of regulatory boundaries. There will need to be some sort of homogeneous frameworks and more of like an ex post macro-prudential approach to look at activities and try to do something when people see bad activities. But I'm not envying the regulators. It's going to be pretty messy in the next decade or so.
So you just mentioned about Hong Kong and Singapore's. As you just mentioned, the politics in the next decade are going to be messy. But does M0 going to have any market plans in the Asian area? Or because those kind of the countries, they have the quite strict compliance things and it's quite complicated. So then you just give up those areas for now. And maybe when the regulation things getting clear and you guys coming back, which one you're choosing right now?
I think it really, it's not a question to us. It's more a question to projects that use us. No, I actually don't think so. I think Asia, especially Southeast Asia, is going to be a pretty exciting area. SEB, which is like the venture arm of SEB, like the Thai conglomerate, is an investor in M0 as well. I think Asia, Southeast Asia, East Asia is very crypto friendly. And I think that some regions, some cities were born as financial hubs, international financial hubs, like Hong Kong, like Singapore. And I think these places will be very interesting for us. Even Singapore, the Singaporean stablecoin legislation is actually pretty high quality. The Genius Act was probably inspired by the Singaporean legislation. I'm European, but the European MiCA legislation is awful. And I think it's, as usual, as Europeans, we want to kill business by regulation. Now, Japan is starting to get very active in the use of stablecoins. We have seen groups like Sony looking around, developing their own layer 2s and having partnership with Circle. Korea has always been a very active place for certain ecosystem. I think Asia is going to be a pretty, pretty hot place for stablecoins, even dollar denominated and not. Now, obviously, mainland China is a completely different topic, which has its own characteristics and probably more of a tendency to operate in a closed loop environment within the country. So on that, I don't really know. I don't know enough to actually provide an opinion on where this is going to go.
Have you guys looked into the Hong Kong Stablecoin Act?
I go to Hong Kong a couple of times a year. I was in Hong Kong last time, a while back. It was probably almost a year ago. It's like November. Anyway, I spent some time with the regulators. I think they are watching. I think that it's going to be not straightforward to issue stablecoins in Hong Kong. It's going to be easier to actually transact with stablecoins that have been issued somewhere else in Hong Kong, which kind of makes sense. But I need to go back looking at what are the evolutions. I know that because I spoke with some of the regulators in first person, that the regulator is very cautious from a licensing perspective, but is also aware that this is the future of financial intermediation, and obviously want a part of it because Hong Kong has always been a financial center, a continental financial center. Now, obviously, it's probably going to have like two speed for like mainland China related activities and international activities, but I think Hong Kong is absolutely has the interest to build to be a financial hub, right? Where people can actually be based there and transact with digital dollar form.
Yeah.
So, yeah.
That's just one more follow-up question. For all those business, especially like you mentioned that in mainland China, there will be like completely different systems due to like different backgrounds and regulations. So there are most of those crypto projects, they decided to set up their companies or entities either in Singapore or in Hong Kong. So definitely those are the group of clients you guys can approach, right? So from the marketing perspective, do you guys have any like strategies targeting those clients in this region?
Or how they can participate with M0?
If they
if they want.
For us, as I mentioned before, our marketing is going to be and is already very builder focused. So we are not building retail oriented brand. We want to build for founders and builders of projects that are using stable coins behind the scenes. So we are not expecting necessarily the retail market to familiarize with M0 too much. Obviously, as we grow, this will happen by osmosis, but we're really targeting builders. So how are we targeting builders? First of all, this sector is still small and we have a deep connection. We have great investors, and I think that the community of our investors is very powerful. A lot of those guys are looking what we are building for other projects. As you know, everybody in this sector lives on Twitter, and we have like a pretty strong presence on Twitter. We are getting now more and more structured on conferences. So we're actually stepping up our marketing around builders conferences, developer conferences, starting from like last month. So we're gonna be at permissionless in New York again next week with a strong presence. We will probably organize something cool for Token 2049 in Singapore in October. And so I think that builders should expect to have more exposure to the M0 brand in conferences directed for builders. That's for sure. We are starting now from the US, but we will come to Asia like very soon. At the same time, most of the people that want to build on M0 are inbound, because those guys see what we're doing for other projects, and then they contact us because they say, okay, we would like to do the same with you guys. Can you help us? So that now we have a pipeline which is more than what we can actually chew, which is a good place to be. So marketing is not really needed, but you should think about M0 really as a developer-focused brand. So I would love if every CEO, founder, or senior person in the crypto ecosystem or fintech ecosystem knows how cool it is to build stuff on M0. Whether the retail knows our existence or not, it's not really relevant to us. I think at some point they will. Like people like Stripe is another good example. Stripe now is a very strong brand, but I think if you ask around the world retail users what does Stripe do, or Square, they don't really. I mean, Square maybe they know because there is the handle, but they don't really know. I mean, it's more of a backend, or AWS, right? As we were discussing before.
Yeah. Cool. So I just want to mention that we attended to Consensus Hong Kong this year, and we interviewed with Animoca brand, the Yet, and also we interviewed the Red Day Technology CEO, and both of them, they're talking about the stablecoins in Hong Kong, and Animoca brand also joined the sandbox the stablecoin sandbox in Hong Kong.
Let's say we know the Animoca brand, the Animoca team very well.
Yeah, I think
hopefully we will do something together in the future.
Yeah. Cool. I think this is the last part for our interview. So you just write about the reconstructing the monetary stack. So would you mind just to explain that a little bit? So once the M0 architecture being mass adopted in the native sectors, not retail sectors, but really the native sectors, is that going to replacing the traditional gatekeepers with the power and zero token holders as the new gatekeepers?
No, I don't think. I mean, it's not really about gatekeeping. I think with reconstructing the monetary stack, I've been writing about monetary policy on crypto rails for years, right? I have a very nerdy Substack that if some of the listeners have issues with sleep, they can find help there. But what I was saying before, like the monetary stack we are used to is built on the interaction of several parties, like central banks, treasuries, commercial banks, correspondent banks, etc. Now, and the first generation of fintech players, an overlay on top, right? They were built. They didn't change what was behind. I think that for the first time with crypto blockchain, we are really reconstructing how these our players interact to actually provide the stability and the transparency and the certainty required for the users, that their value is stored appropriately. And we want to be part of that. I think that the banking sector has been immune to really innovation and change over the last 20 years. All the companies have been radically transformed, but banks, they are still the same. This is over. I think that the financial intermediation space is going to change dramatically. And I think that we will have lower barriers of entry, more transparency, more technology. And we want to be part of that. I think this is going to change a lot. And I think it's very exciting, but in the next 20 to 50 years, the financial sector that we are used to, which is like a 20th century phenomenon, is going to be completely different.
So last question for you, Luca. Could you tell me your visions on M0? Or for instance, like what is the goals you want to achieve in 5 years, and what are the futures you are seeing that, for instance, the Circle and Tether may be not part of it, and protocols like M0 will be similar to M0 will be basically flourish. What's your vision?
I think the Circles and Tethers in 5 years, they will be very profitable and successful businesses. But my dream is that M0 will be an ever evolving set of open architecture technology the new generation of financial applications are using. So in my dream is that the JP Morgans, the BlackRocks, the Revoluts, the Robinhoods of 2040, 2035 are going to be built using M0 infrastructure for their digital dollar issuance and management. So my dream is that the new generation of financial players is not here yet, and these are going to be the people that we know personally, and they're building great products, and they will use us as an infrastructure. Now, there will be hundreds of billions of dollars on M0 infrastructure, and M0 tokens will be worth hundreds of billions of dollars, but the businesses that will be built on top of M0 will be worth much more. And I think that's the dream I have. We are building an infrastructure which wants to be used by people building cool things to challenge the current incumbents of the financial landscape. That's where we want to go.
Wow, that's really inspiring.
So I'll say you guys are Ethereum for the stablecoin, not the cloud service.
Okay. All right. So thank you so much, Luca, for your time today, and we learned a lot, and we're really glad that have you as our first guest to talk about stablecoin in our podcast. So thank you again, Luca, and I'm hoping that you have a really enjoyable discussion with us.
And for any of our audiences who are the builders or the CEOs or the leadership or of the fintech companies, so M0 is definitely the ones you guys are going to look into. And let us know if you guys want to heads up or want to know anyone from the M0 teams, and so we can do the connect. So I think that's it. Thank you again, Luca. Thank you to join us.
Thanks for having me.
How that swing taught me to sing makes my life worthwhile. How that music gets me high, brings tears to my eyes. My hips are swaying side to side.